Happy Monday, everyone. It is 8 a.m. Chicago time on the 14th of May, 2018. Thanks for joining me yet again. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. This morning coming in, we're looking at a mixed market. The S&P minis are up 3.75 points, trading outside of Friday's range just by 4 ticks or so. And it looks like oil, the NASDAQ, the Dow, the pound, and the Euro FX are higher. Everything else is below, including the Russell down 70 cents, the 10-year bonds, and so on. So we have a clearly mixed allocation today as we come into this week. The drivers this morning, just not seeing anything substantial on deck as we start our week. This morning's calendar is relatively clear. There's nothing pending. Quite a few speakers from the Fed and the ECB, but other than that, there's really nothing to that's likely to interrupt or interfere with the market's own push for the week. As always, you're welcome to send a message or tweet at me, send a DM or whatever for a calendar recommendation. I'll let you figure that out. But let's get directly into what we saw on Friday as the potential plays. So Friday, we were opening in the upper end of the Thursday range, opening in range, basically in value, although that particular profile shows that the market accepted the 2720 key figure as the point of control of the session. You can see the point of control is 2719.75 right here, the POC right there, right on top of this key figure at 2720. Very orderly. And the expectation is we're likely to drift down into 2715 and then find an impulse for a push higher. I expected us to take out the high on Friday, but mostly spend the day in balance. It didn't happen this way. This was expecting a push down and then an impulse up. Didn't actually work out that way. The way it worked out was this, where we consolidated, pushed up and out of the Thursday range, and then we fell back in to bounce back out on the close. Here's what actually happened. Pretty tight, relatively tight range on Friday. Just 6 points for the IB, 6 points. That's very tight. We haven't with the volatility in range have essentially been dropping quite rapidly since the big breakout in February. So overall, let's cut down on the noise here. Overall, we opened, tested lower, pushed out of the prior day's range. The prior day's high is this green line right here, 27.25 even. Pushed right through by 2.5 points, pull back into the opening swing, continue to push higher. A lot of effort being made by the buyers. We had Delta playing with them, playing along, so pretty decent effort and payback for the buyers. And then suddenly we get this push down from 32.50 to 23.75, extending our rotation down, below the impulse line. And so we expect a continuation. So we've taken out the IB high early, then we took out the IB low, pulled back to Friday's high or Thursday's high, and then continued lower and then finished in the middle. Friday was completely balanced, almost a perfect Gaussian curve. in a way, if I stretch this out, there you get tapered ends, the bulk of it in the middle, tapered end. So a little bit boxy, but overall, very, very balanced profile, and not much for the market to reprice at that point. So coming into today, knowing that's where we are, it's a neutral normal day or normal neutral day where we finish in the middle. Coming into the day, we basically know that we finished inside of the IB, and as we reopened, let's clean this up. As we reopened in a gap. And then we essentially, we reopened. This doesn't look right. Let's make sure that let's make sure we're not filling in artificially. Oh, we did open at the same price we closed. It's just a little. We opened a little bit lower than where we closed. For some reason, I need to reload my data. Hopefully this is correct, but we reopened. We pushed right out of the range of Friday, the high of 32.50, and we continued 27.41 before falling back in. We're currently trading against Friday's high on low volume, or a volume that's in line on the lower end for the session. We have a completely balanced profile on Friday except for this part here. And again, I need to check this data. In fact, let me just reload current session, make sure that's correct. And overall, it looks fairly balanced, but it does look like it's ready to fall through into the prior day's range. Not much to glean from the overnight session, in my opinion. It's not really giving us anything of substance other than the fact that as it pushed up into 27.41, there was less and less interest. So we have a pretty decent high going on in the overnight session. Okay. Still loading data. You got the circle of death here. So I have to wait for that, unfortunately. Oh man, I was just trying to backfill the current session. Not sure why it's taking so long. Sorry about this. Probably shouldn't have done that. Usually it takes maybe a minute. There we go. Nope, that data is correct. Looks like we opened 27.27 and a quarter, pushed to 27.41, and we are gliding below. So what we have is, instead of a balanced profile like we show here, what we have is a P-shaped session. So a short squeeze, potentially a short squeeze into all-time high. All right. So that's where we stand. Coming into today, our clean intraday chart. Let's throw some stock zones up. Coming into today, we have some confluence up here. You can see these levels on top of each other. Pretty thick area between 27.40.50 and 27.46. If we do push into this area, I'm going to be looking to sell pretty heavy. But this morning, not seeing a very strong catalyst for anything, to be honest with you. I expect it to be a fairly quiet trade this morning. An open auction, probably in range. I expect this to fall a little bit lower. So let's just draw it the way it is. I expect it to open probably in range. The overnight inventory is long. I'm expecting it to test higher and then give us an impulse down into the 27 area, consolidate and bounce back up. I do not expect much range today. Barring news, I do not expect much range today. I'm not expecting much out of the market today at all. So this covers about 9 to 10 points of range. 9 to 10 points of range, and that's pretty much it. The value area is valid, so it could potentially push down into the value low and continue to bounce back up. But for the most part, I expect today to be a pretty bulky profile type, and I'm expecting to trade from the outside in today. In other words, I'm not expecting a trend. It did bounce on Friday. It is bouncing overnight, but not seeing a catalyst for this to continue to drive. Friday, we have a higher high, higher low. We have a higher point of control, and we have a neutral day. So on a tame, I'm going to go with a tame scenario for scenario 1. Scenario 2, test, open, test, higher, and then impulse down, and then we cross the range, and we start to take back some of the gains that we made last week. So I'm looking for 2 to be a trend down, corrective, responsive to the middle type of trade. Okay. Scenario 3, the third scenario, the lesser likely scenario, the trade is to open in an open auction in range, test lower, consolidate, impulse out, and then start to push towards the 27.41 quarter and potentially this 27.44.50. I'm going to sell both of those if we do get up there on a virgin test. Okay, so scenario 1, test up, down, balance. Scenario 2, test up, impulse down, continue to push down, and continue this neutral play on Friday, and start to explore lower, potentially pushing to 27.13 and even 27.09. That's scenario 2. That's the more aggressive and, for me, the more profitable scenario most likely. Scenario 3 is a test of the a value high of the balance, pushing up on an impulse, and then continue higher into some large resistance up here, large potential resistance, I should say, up here in this big zone of multiple confluences. So that's really what we're looking at this morning. I'll keep it nice and short. Just hopefully you're starting out your week with some sort of an idea of how well or how poorly you did last week. Just confront your actual results. Really important to face the facts and to set out for what, really set out to face what the goals are for this week. What do you need to work on? So it's Monday. It's a good time to figure that out. Don't spend another week just kind of sitting and staring blankly at the screen and looking for a new technical edge. Your edge is, yes, you do need a technical edge, but really the real edge is in your ability to master what you're doing through just a focused approach to destroying your errors. Your errors are what cost you your consistency. So hopefully you've set that up. Travel for the cats. How come your charts don't have the overnight high at 41? It's right there. Overnight high, 41. But I'm looking at the day session only when I'm doing my planning. I've already considered the overnight in the plan. I've already covered it, covered the Globex session with you. Good luck today, and I'll catch you tomorrow. Take care.